All right, welcome, fams. Let me say happy Christmas, Merry Christmas. I'm already calling a Happy New Year. Let me just say Merry Christmas and congratulations on the birth of Christ. That's what we are celebrating this time, and it's important that we know that Christ was given to us, to the world, as salvation. All right, Christ was given to the world for our salvation. So, congratulations on the birth of Christ. Merry Christmas to everyone that is on this call. Like I said, all questions, just let me have them in the group. Yeah, you want to ask questions, just drop them in the group as I teach. I'll give time to speak about them. There are a few things I want to talk about. Just three things I want to talk about tonight. Three things. One of which is market structure. Those that have been on my YouTube page or you've been with me in our free group here, you know that personally, I'm a fan of market structure. Okay, I'm a fan of market structure any day, anytime. I'm a fan of market structure. That's what I teach. That's what I do. Then I'm going to be talking about order block, and then I'll talk about the third thing will be how to get funds. How to get funds. How to get funds. These are the three things I want to talk about tonight. First, I'll speak about market structure. I'll speak about order block. Then I'll speak about how to get funds. So let's start by talking of market structure. Some of you that have watched my videos, you will know that I speak about market structure all the time. The reason is this, it's simple. Market structure is the bedrock for which we can trade the financial market. The structure is simply price action. Market structure is how the market is, um, yeah, don't worry, the call is being recorded. Market structure is how the market has been behaving over time. So we've been able to, when I mean we, I'm not saying like we. So people have been able to come up with this model to enable us retail traders get involved in the financial market, because the banks that are actually trading, that are actually causing the volume in the market, they don't trade market structure. All right, they just, they have a particular spot they are going to. They don't trade support and resistance. They don't trade demand and supply. No, they don't trade trend lines. They don't even trade price action. They have a particular point they are taking the market to where they want price to get to. Price will definitely go there. It doesn't matter where you get involved in the market. So by market structure, other persons that have been able to get involved in the market, they were able to find out, all right, so how will retail traders be able to get involved in this market? And they came up with what we now call market structure. So by market structure, are simply saying how the market is designed to run. Okay, so we know that if price is bullish, we want to see movement like this. Price should keep creating highs and breaking them. Price should keep creating highs and breaking them. That's market structure. So we want to see price continue to create highs and break those highs created. Okay, that's market structure. So we see price keeps giving us highs, highs and breaking those highs. So in this regard, we say price is bullish. That means the market is buying. All right. These things are simple. You see them play out on the chart every time. So anytime you see price giving you series of these highs, you know that the structure, the trend is bullish. We're in a buying market. And what that means is that you want to only be looking for buying opportunities. All right. Once the price is in an uptrend, you want to look for only buying opportunities at discounts. Okay, only buying opportunities at discounts. That's what you want to look for, buying opportunities at discounts. So price comes, gives you a high, a low, gives you this move and create another high. Why didn't I refer to this as a low and price broke it to play this zone? I've said this in the mentorship team that this last move, okay, price should necessarily, I'm not saying must, please, on the line, I'm careful in using my terms. Price should necessarily come to the 50%. Price should mitigate 50% of this last retracement, because this is how the market runs. There's an expansion and then there's a retracement. Okay, so once you have an expansion, price retraces and makes another expansion. Okay, so if price is retracing, we want to see that price should come to at least 50% of this last push. Okay, this last retracement, price should necessarily get to 50%, because 50% is discount zone. We buy below 50% and we sell above 50%. So if price is going to come lower, I want to see maybe something like this. Price comes to the 50%. Okay, that's structure. Then from here, I want to see a continuation above. But if you look at this case that I presented here, price didn't touch the 50%. So this becomes an inducement or an internal liquidity, depending on the terminology you want to use. This becomes an inducement or internal liquidity. Okay, so price comes, take out this inducement, you call this distribution. So after this distribution, that is when price will want to accumulate. Okay, accumulate, and then we target this high. Since we are bullish, target it. Price came and then price tagged it. So immediately price tagged it and price is coming back. Price created this inducement, this internal liquidity. I'm expecting that price should take this out and then I should look to buy here. This is the model formation that we teach in the mentorship team. This is the model formation we used to get all the entries you've been seeing me uploading, all the entries you've been seeing those in the mentorship team uploading is this simple model we use. We always want to see price come to mitigate 50%, at least 50% of the retracement before another expansion. So in a case where the 50% was not mitigated and we see price coming back, while you are trying to buy from here and you get stopped out, you will call this a break in market structure. Then you've been stopped out, so you are waiting that, okay, price come here, we sell. Price comes there, let's say price comes here like this and start selling, then you enter from here, price blasts you again. You are now wondering what's going on. Yes, you are seeing the market wrongly. All right. You are seeing the market wrongly, and that's why you are being taken out. So this kind of entry model, this is what we call market structure, right? This is the perfect symbol. Uh, should I say perfect? Yeah, something like that. This is what you should be looking out for market structure in a bullish scenario, in an uptrend. Then when we have a downward trend, this is what you should be looking out for. Price gives you a low. Price should keep creating lows, breaking the lows. When we are bearish, when we are in a sell structure. I want to see price breaking all the lows. That's what I'm interested in. Okay. So price created this high, broke this low. So this becomes my change of character. The first low broken. Price comes here. Price didn't get to 50% of this move, of this last retracement. Price didn't get to 50%. So I still have my eyes on the 50%. I still have my eyes there. I'm expecting price should come to the 50%. So price take this out and price comes to the 50%. So this becomes an inducement or internal liquidity that is being engineered for price to come to something here, either an order block or a fair value gap or an imbalance. All right. Yeah. Price comes to rebalance this inefficiency that was left here by this expansion. Expansion will always leave an inefficiency. So you see the candle move in a very successive manner, or in a very bullish trend or bearish trend, and price wants to come back to just rebalance them. So it's something like this that we teach and we work with in the mentorship team. So all the entries you see us dropping, all the trades you see us dropping, we hold trades for hours, sometimes for days. This is the same thing that we teach. We want to see price keep breaking the lows. If we are bearish, if we are selling, we are going to only be looking for selling opportunities when price takes out this liquidity. So look for selling opportunities here. Though there are lower time frame models that we use, of course, we have entry model as well, some of which I've taught in my YouTube space. For those of you that have not, if you go through my YouTube space, I've taught some of the entry model that we use for free. All right. So this is just basically what market structure is all about. Is that okay? Now, before I go to order block, I want to, let me just take one or two questions from the Telegram group. One or two questions. And drop your question. Let me just take one or two questions. You have questions as it relates to price action, market structure, how. I'll take you to the chart, all right, so that we just see how this thing plays. So you have question on that. Maybe you can just let me have that. All right, let me just talk about order block briefly. Order block. What is an order block? You might want to get your pen and write this down. Another block is that candle or series of candles that takes liquidity and led to a break in market structure. Another block is that candle that takes liquidity and led to a break in market structure. That's an order block for you. An order block is that move that takes liquidity first. That's the first thing. It captures liquidity and then led to a break in market structure. Sorry about that. Took liquidity. So if you can see what I put here, an order block is this move. This entire move takes liquidity and led to a break in structure. Now, what is liquidity? Liquidity, as it relates to Forex, is simply where you have previous buyers, like here. You have previous buyers here that were buying this market up. That's liquidity. So previous buyers are here because liquidity is money, all right? People are buying here, their money is here. Because if you are buying here, you are definitely going to have your stop loss around this side, maybe somewhere around this place for everyone buying here. So that's your stop loss is money. If price takes you out, you lose money, right? So that's liquidity. So liquidity is the money that you put in to buy this market to join this move up. So price rallies down, take your money and then run up. So an order block takes liquidity to both sides, takes out the sell side liquidity, those that were buying here, and runs up. Take people that were selling here, take people that were selling here. Takes all the sell side liquidity and all this buy side liquidity, takes them out. That's another block. So this zone or this candle that is here or this move that is here is what we call an order block. And this is what I trade. Okay, this is what I trade. So an order block is that candle. I'll send it back. Okay. Yeah, this candle that moves here, take out the previous buyers here, run up, take out the previous sellers here. This is a valid order block. Now remember that a candle on daily will not be a candle on 4 hours, because a candle on daily is 24 hours candle. So if you come to a 1 hour, sometimes it might be 3 candles, 4 candles, you come to 4 hours, can be 1 candle, 3 candles, 2 candles that did damage to the previous buyers here. That you have to be able to spot that order block, because once price is returning, this is what price is going to do, or what we expect price to do. Price should come to at least 50% of the order block, at least 50% of the order block, and price will run away. Okay, sometimes price can come to the open of the order block. Now watch, price can come to the open of the order block like this. Yeah, I think I would love to use this. Yes, price can come to the open of the order block and push higher. Remember that we are expecting price to mitigate at least 50%. So I will still expect price to come to the 50% before price will run away. I still expect price to do that. The reason is this: there are orders that were here that made price to sell and buy. Price sold and buy. So some people call this order block a sell to buy candle, or they call it an OB, an order block, or they call it mitigation candle. They are all different terminologies. It really doesn't matter. You can call it whatever you want to call it, but an order block is this: I'm interested in this zone that resulted in taking out the previous buyers and took out the previous sellers. So anytime price is returning, I want to see price test first of all the open of the candle and rally up, then come back to the 50% of the candle. That's what I want to find. Okay, so this is what we call what some persons call neck and shoulder, right? So yeah, neck and shoulder, or head and shoulder, or whatever. Yeah, somehow. So you want to see price come to at least the 50%. So if I extend this my line from here, I extend it to this zone, I'm expecting price to maybe possibly touch something like this. So we should have this touch. You call this a head and shoulder. I don't know how to call it. Yeah, maybe something like this. I don't know. Okay, but I'm interested in this candle. So when price comes here, in the mentorship team, we now begin to teach them what to look out for inside of this order block. Either there is an imbalance or a fair value gap, or there is that particular candle, the order block candle, that you now want to play off on the lower time frame. All right, so this is the concept of an order block. Yeah, let me head to the Telegram channel, drop your question, If you have question as it relates to what I've just explained, then we'll go to the chat. Yeah, someone was raising up his hand. Okay, in the absence of no question, I'll take you to the chart. I'll show you this structure. Then I'll show you an order block. And then you are going to discover how we play this pattern. Okay, so I guess I should just let me open another page. Okay. All right, so this is VIX 25 on your chart. This is VIX 25. So let's disregard what is happening right now. Let's just go back in time and find out what is going on. What is going on? Go back in time. Let's just find what is going on. Okay, maybe I should use this. Okay, from here. Let me use this. Let me use this. Okay, so let's go to a 1 hour. Let's see and get that story. Now, market structure is in all time frame. Okay, all time frame, whether 1 minute time frame or 2 minutes time frame, market structure is in all time frame. Okay, all. So let's look at the story here. I want to start the story from this place. Okay, so let's start it from here. You will see that price was bullish. You agree? Because this was a high, a low, a high, a low, a high, a low, a high, and then there was a break. Was there a break? Let me show. So anytime you are not sure, you can just switch to the line chart and find out if there was a break. All right, there was no break here. That was just double bottom. So price continued moving. Price gave a high, took out this. All right, this way it becomes interesting. Okay, that's where it becomes interesting now. So watch what price did here. Price took out this week when price returned, took out this. That's a break. Liquidity sweep. Price took out these previous sellers here, wigged them out. You can see what price did. Price closed below all of this zone, like all of this zone. So this becomes a break in market structure. Break in market structure. Break in market structure. Now, what did I tell you? This whole entire move, that's what I'm looking for. That's the entire move. The move, I'm now teaching order block now. The move that took out liquidity and led to a break in market structure. All right, that's the move. First, watch, after price broke structure came, what did price do? Price came to the open. This is the open. I would love to take this color. Yeah, maybe red. You saw how that price came to the open. Price came to the open and sold. And sold. The exact same thing I told you here. Price came to the open and bought. You get now? Price came here to the open and bought. But has price come to the 50%? No. Has price come to the 50%? No. So I'm still expecting price to come to the open first. Price came to the open and sold, creating liquidity. So this first sell here is simply liquidity. Here's liquidity. Liquidity was engineered so that a lot of people started selling. Okay, while people were selling, price will definitely come back to 50% of this zone. That's what I'm expecting. So Let me extend this now to 50%. Let's see. So you see, price came very, very close to the 50%. That was the entry. So I'm expecting at least, that's why I didn't say price must, but at least price should come to the 50%. And that's why you see price came above. Took out this. Why the price started selling here and now went back? This becomes inducement, liquidity. It's like a trap, like a bait. You know, you want to catch a rat. You now look for one correct fish. Spice it very well, put it in the trap. You must look for something that will get the rat interested. So the rat sees the fish, not knowing there's a trap or there's a gum somewhere. It comes for the fish, and then you go for its life. So that's what inducement simply means. So the market created this liquidity so that a lot of people will start selling. At least it has touched the open. They entered, they started selling. Price came, look at these candles. At once, blasted them and ran away. Price blasted them. All right, so you would have gotten your entry from here. Now, if you are, for those in the mentorship team, they know how we refine this, okay? Because I'm already seeing the entry. We know how we refine this, okay? There's a way we refine this. Once we refine this, you get in on this spot. You will get in on this spot. Then all this cell, you'd have cut all this cell, like all of this cell. So let's leave all that, okay? Let's continue. We are looking at structure and order block. I just explained that's the order block. The order block is here, is here. I didn't tell you the exact order block, but the order block is here, is within this zone, okay? This whole move took out liquidity and broke structure, so the order block is here. Let's go ahead. Now price began to give you, after this low was created, price created this high and ran away. Now that price has gone lower, what are you expecting? I'm expecting that at least price should come to this zone, at least 50% of it. There's a way we also refine it, okay? That's what we're teaching in the mentorship class, so I wouldn't be doing all that refining, so that's it. Now, I told you something, okay? Don't forget what I told you. Let's go back here. Price will come and test the open like this. Okay, since we are dealing with, all right, price will come after breaking, price tested the open and ran away and came back to the 50%. Watch it. Can you permit me to remove this down background? Let me remove this so that it will be clear. Now, where is the open? This is the open. So let me put the mark, red line on the open. That's the open. Do you see that price tested the open? Price tested the open of this move of the other block. The other block is here, so price came tested the open and took the lows. Immediately I saw price tested the open. This is what I'm going to be waiting for, 50% now. So I can just come, put my entry on the 50%. Did you see that sniper? That was your entry. That's a killer entry. So when you see me drop sniper entries, we are not doing guesswork. We know what we are doing, okay? We've done this over and over again, like back to back. You've seen my charts. I'll tell you, did you see that entry? Hope you saw the entry. This is how we get the entry. Bam. On it, price just tapped, activated you, and off you go. This is a 1 to 4. So you are risking $10, you should make $40. You are risking 100, you make 400. You are risking $1, you make $4. That's fair, that's okay. By simply knowing this simple model, okay? We teach all these things and many more in the mentorship team. Simple model, but you just keep getting entry. All right, price came, you got a 1 to 4. Now, watch what price did. Price came back to the same line after giving a 1 to 4. And price came back again, but didn't take this low. Immediately I saw price didn't take this low, I would have been on this buy. Yes, I would have been on this buy. Because those in the mentorship team, they know what these things mean. When price returns, that's a break in market structure there. A break. 1, 2, then there was a very sweet entry here. Oh my goodness. Because the sweet entry would have been on this buy. You take this buy, you will definitely get a 1 to 3. The risky one, you get 3. So you have like a 10 pips there, you should get a 1 to 3. I've always said so. Look at what price did. Price gave a sweet 1 to 4. Okay, 1 to 4. And since overall we are bearish, price came back and rejected again. Okay, price rejected. Now that price has rejected, this was the last move. I'll remove this. Okay, last move, and price tagged this low. I want to see where price tagged this low. This was the low. Okay, double bottom. This was where price tagged the low. So if you know the higher time frame structure that were bearish, when you bought this, price gave another distribution here. Those in the team, you know what I'm talking about. Price already break and left a fair value gap. And this is an order block. Why do I call it an order block? Watch. Price ran up. You see, price ran up. Took this week. All the previous sellers here, price ran, took them and ran down and broke this place. So this becomes a valid order block. So what can you see? You can just first of all take the entire move. The entire move. You can just put it on the 50%. You will get entry on the 50%. I'm sure of that. Let me move this to the 50%. Okay. That would have been your entry. Price didn't tag you. But price came and took this week. You know what we use this week for? Price came to the open, gave that entry, came back. You can see the multiple breaks were there. Multiple breaks, confirmation, multiple confirmation. We're all here. So it either got in this entry or this entry. And then price gave this big fall. So this is just the simple model. And then other few things that we add because we want to refine it for those that are, you know, just trading little accounts. We want to refine it, but this is the model that we teach and other things that we, you know, just add to it. All right. So now I want to believe you that it's clear, it's simple, it's brief. So you have questions as regard that. Maybe you can just drop in. Let's talk about how to get funds. I would have make a complete or a separate video about this, which I think I'm still going to do by January. But first of all, let me say this. Never, please, do not trade a $10 account. Don't. Don't trade a $20 account. Don't. Life is not difficult. You're only stressing yourself. Okay? You're stressing yourself. Stop trading a $10 account. Even your professionals, all these big names you see on social media, on YouTube, on Instagram, they don't trade a $10 account. They don't. But you will not hear. We keep saying these things and you guys just enjoy blowing your money. You just enjoy blowing your money. If you have a $10 account, you have a $10, $20, or even $50. I prefer you should use it to pay for mentorship. Stop trading small accounts. You are stressing yourself, all right? You're stressing yourself. If you are giving a $3,000 account, it's better. You have relief, all right? Your emotions are okay. If you are having a $3,000 account and you lose $100, you will not be emotionally drained like somebody who has a $100 account and lost $10. You will not be emotionally drained. You will not. Okay? So, how should you look for funds to trade? The first I will talk about is savings. Save up. That's the first thing. Save your money. Save your money. Save up. You are working or you are doing business, save up. I spoke to one of my guys and he's in the mentorship team and he has been learning for quite 3 months now. And he has sent me his charts consistently. I've seen his improvement. So I had to discuss with him. Now you are good to fund your life account, okay? You are good to fund your life account. So how do you want to go about it? Then we discussed, and I advised him. He had about $40. I told him, don't even use that money. Save that money. If you know you are not going to be able to keep that money, send it to somebody you trust. Keep that money for me. Do not fund anything less than $100. That's what I told him. Yeah, you say some mentors they tell you to fund $20, $30, and they hold you by the hand. It's all right if they are doing that for you. It's okay. It's fine. It's okay. I don't have a problem with that. But the best advice I would give you, you are entering into 2024. The $10 you funded last year, you have blown it. The $30 you funded, you have blown it. Even the $50 you funded, you have blown it. So save up some money, like some money. The minimum deposit you should be looking at is $100. So keep saving. If you can't, just get any of these accounts that you are not, you don't have access to that much. Push the money there. Once the money is able to complete $100, fund your account. Or another way, you can also save it in your Derive dashboard. Fund the account. Do not log into your MT5. Don't log in. Just fund it. Don't even create a live account yet. Just fund them to your dashboard. Keep funding until you get $100. It will give you some leverage. You have $100, you lose $20. You are not emotionally down like somebody who has a $10 account and lost $7. It's an advice, so please, guys, it's an advice. You can take it, you can leave it. It's up to you. All right. I know how difficult it was for me to trade a $10 account. I funded $10, it didn't work. Funded $10, it didn't work. In fact, one trade was blowing them. All right. But the trade that really helped me was when I funded $40. I agreed to $90. I first of all removed $50. That's how I did my trading. I removed $50 to take care of myself and my emotion, to pay bills, so that my life is not hanging on that account. My life is not hanging on it. If I see trade, I trade. If I don't see trade, I'm off the chart. But you have a $10 account and you have bills of $200, then you want to trade it every day, you end up blowing it. Okay, so please, this is an advice. Stop trading a $10 account. Stop trading $20 account. You want to trade the minimum, I will advise. I've been in this business, so I've been in this business. I've been trading live since 2021. Yes, 2021. 2019, 2020 were for demos and blowing accounts. Since 2021, I've been trading live, like live. So I know what I'm saying. Number two, how do you want to get funds? Get a job. Get something doing. Get a business. Get a job. Get a job, get business, get something doing. Do not rely on Forex as your only source of income. You are going to be drained. Forex is designed to make you poor and poor. Forex is never designed to make you rich. If not, immediately you start buying, price should start buying. When you start selling, price should start selling. So get a job. By that, you get something that foots your bill, then you can have the right psychology to trade. Okay, you can have the right psychology to trade. I'm holding this call now towards the end of the year so that you know what to look out for 2024. You know what to look out for. Then number three, sell your skill. Sell your skill. Okay, are you a marketer? Sell your skill. Are you an affiliate marketer? Sell your skill. There are some of you, you can make YouTube videos in various subjects. Sell your skill. Okay, sell it, monetize your skill. People laugh when they are around you. Why not just open a Facebook channel and start making people laugh? Just sell your skill. That's what I'm saying. You can talk about relationships. Sell your skill. Hello, can you hear me? Sell your skill. You can talk about business ideas. Sell your skill. Maybe you can speak about what's it called? How to raise money, how to, make income. Just say, look for a skill to sell online. Believe me, you're going to make some good money. Okay? Look for skill to sell online. Then, if you want to sell Forex, you want to be teaching people Forex, it's easy. First of all, master it, master structure, master entry, master structure. Because if you start selling and people are paying for mentorship and they come to your mentorship team, you are not giving them anything valuable, they are going to give you bad rating. But if I open my DM, you are going to see there's tons and tons of messages saying, thank you, sir. Coach, thank you, sir. Coach, I passed my account. I passed this. I did this. And, one of my guys sent me a message today. He just passed, I think, a $5,000 account. Yes. Many, they just take this. They've gone through the videos, they've attended classes, they've done assignments, and they've gotten the skill. So they can pass their account, pass different levels of their account and all of that. So please sell your skill. If it is Forex you want to start selling, you want to start doing mentorship, personally, I'm going to advise you to go ahead, but ensure you are good. Hello, ensure you are good. Pay for mentorship, learn it very well, and you make good money from Forex coaching. You will make good money from it. But if you don't know what you are saying, you don't have results, what do you now want to sell? Tell me. If I tell you before I became confident, if I tell you how many of the mentorships I paid for, it will wow you. Yes. We're in December, in October, I still paid for another course. I paid for another mentorship. Yes, in October. Don't think you know everything. No, I don't know everything. That's a fact. I still paid for another mentorship in October. So it was not much, but I still paid. And when I got there, some of the things my coach started speaking about, I've never heard them. I'm I'm gonna put this video on my YouTube page and I will tell the truth any day, anytime. I've never heard them. Okay, so please sit down. If it's forex you want to do, be good in it. And there are millions of persons out there that will chat you for mentorship. I never planned for mentorship. People started seeing my chat. In fact, the Smart Traders Network group, I created it as my journal where I put my personal trades. Before they play out, my markups, and after they play out, I come to update them. Those that hit stop loss, I'll put them there. Then I want to find out why did they hit stop loss. It was my personal page. When people started sending me DM in some of my other groups, guy, Alpha, teach me this thing now. I've seen your chat. I said, okay. Some of them are here. Some of my guys are in this call. Then I said, all right, let me charge you $30. Pay me $30 and then I'll teach you. And 5 persons paid. So these guys, they really want to know this thing. That's how I started. November was my 1 year on YouTube. Like 1 year on YouTube. My first video was in November 5th or thereabout. That's what engineered me to begin to make YouTube videos. All right. It's not like maybe I sat down and said, I want to start making YouTube videos. Do I have the time? I have messages to prepare for, I have prayers to, I have programs, church activities, and all of that. But when people began, there was a demand for it. Then I started selling that skill. And I also made good money from mentorship, like good money from mentorship. I can tell you the truth. Why should I lie to you? It's my money. I paid to get the skill. I sat down. I spend hours, guys, on watching videos, and I still do. Like I still do. Come on, I still do. I still do. Let me just show you. Let me show you this. Let me show you this. Well, let me show you this. All right. This is Wealth Hub. This is my group. These are tons and tons of videos, all right? Tons and tons of videos of my mentor, okay? Tons. Now look at my library. This is our mentorship library. These are tons and tons of videos of different subject matter we have handled. The power of M15 time frame, supply and demand, analysis, liquidity for entry, following the trend, tons and tons of lectures and materials that we have in the team. For our mentorship team, we have tons and tons of videos. Okay, and my guys are doing assignments, they ask questions, they come personally to my DM. Coach, can I take this? I say no, this is what you should look out for, and then if I take you to the team, you are going to find charts, different charts, different charts. My charts, students charts, different entry. These are students results, it's not my result. Like, these are students results. You see results, different chart analysis. We share virtually everything here. We share virtually everything here. Everything, different charts, where to enter, stop loss, everything. We do that here. So you need to sit down, learn this thing, and sell your skill. I don't know why I'm this passionate, but I know 2024 is going to be tough. It's not a prophecy. I'm not a prophet. It's going to be tough. Guys, I'm saying this from my heart. So if it's Forex you really want to do, sit down, get the skill. And if you feel you can't do Forex, it's okay to quit. Yes, it's okay. It's okay. You might be successful in affiliate marketing, you might be successful in business, you might be successful in getting a job as a secretary or something, but you just have to do something that is worthwhile. That's what I'm saying. All right. And then lastly, before I round up this call, just get a funded account. Okay, get a funded account. And how will you get a funded account? Get the skill. That's the only way you can get a funded account. Get the skill. To get the skill, you can go through their rules, you can go through their challenge, you can go through their different phases, and then you can pass their different phases. Is that okay? Yeah, I think that's all I just want to share. The other things I'm already warming up and preparing for the next phase of mentorship will be having. I initially wanted to start those that were interested trying to book slot. I said nobody should pay until 8th of January. But so many people have been reaching out to me, sir, I don't want to keep the money this festive period. If I keep the money, it's not going to come out. So just send your account, let me just pay. I just had no option. So people are already paying, people are already booking for the slots, and we are going to just do what we can. If we get the 20 slots, we are going to close because I really love my time and I like giving my students the best. Once we close, we'll sit down with calls and different programs that we're having. Is that okay? So, guys, I'll end the call from here. Thank you so much for your time, for hopping on the call. I hope to see you in the new year. Merry Christmas. Happy New Year to everyone that joined the call today. Those that shared the link, thank you so much. Those that are joining us for the first time, thank you so much. And if you have not subscribed to our channel, please, it will be necessary you do that. We have amazing videos there, like amazing videos, all right? So much amazing videos, tons and tons of amazing videos that you will find useful to your journey, okay? And if you have any question, you can always come to my DM. I'll give you attention. Yeah, you can always come to my DM. I'll give you attention. All right. We're about 1,007 subscribers already in our YouTube channel. These are contents. You have tons and tons of content. Okay, like tons and tons of content. Some of these materials I just released them this week. They are part of our mentorship materials. I just released them this week. I had to do them for free. Yeah, for free, so that you can just maximize, these materials. There are still some materials that I will never release because they are purely mentorship materials. I will never release them. That is sure. We have about 68 videos. Yeah, 68. Yeah, Presh, thank you. Funding, please get funding. Yes. I wouldn't don't trade the $10 account. I've said it. Don't. You are wasting your time. I'm not saying you're not going to be profitable. I know people that have made money from trading $10 account. It's good, it's fine. But this is just an advice. You can take it, you can leave it. Okay? All you need to be profitable. All right, that's the mentorship video. I wouldn't be releasing that. It's purely mentorship video. Not releasing that here. Then market structure from a higher time frame, but you'll still find all these materials in my YouTube page. Okay, so the others that are private, they are completely mentorship materials. Just go around, just go around. Please subscribe. If we can hit 2,000, that will be good. Can hit 2,000 subscribers, that will be fine. Right. So thank you guys for your time.